It was a quiet day on Wall Street, but we did have a few notable streaks continue. We had the NASDAQ put in its longest winning streak of the year. And then on the flip side, we had the crude oil market put in its longest losing streak of the year. So we'll take a look at those movements and see what it means for our overall market posture. And then in our trade application example for the day, we're actually going to focus on a fixed income security to place an options trade on. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 9th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience here tonight. As a reminder, you can subscribe to our YouTube channel, and while you're there, you can also sign up for our email distribution list, which will entitle you to not only receiving notification whenever we upload these videos on a daily basis, but we'll also let you know what stocks are giving you overbought and oversold cluster signals within the S&P 500. In addition to YouTube, we're heavy users of Twitter as well. Make sure you're following me there. My handle is @BrandonVanZ. And if you guys would be so kind to click like and retweet on these Market Outlook videos, that helps get the word out about these videos and helps David and I understand that you want us to continue with them. In addition to Twitter, we're also on Facebook. You can see the web address on the logo in front of you, so feel free to join our ever-growing list of students there. So let's go ahead and get started now with some analysis on the markets here. As you can see, I've got chart 4B pulled up in front of us for those of you that are premium Market Scholar subscribers. Now remember, this particular chart is going to focus its energy on the market forecast indicator, which is a technical indicator that you can find on the Thinkorswim platform. And this particular chart setting here is going to show us all four major US indices at once. So that way we can kind of get a compare and contrast look towards these different indices. So as you can see, the S&P 500 had a very quiet day. It was only up actually was down 0.14%, so essentially flat. You can see right here that we've basically gone flat for the last couple of days after touching a new multi-month high here a couple of days ago. Remember, we're still within 1% of hitting all-time highs that was set back in January, so maybe a little bit of a cooling off period. You'll notice that we do have what's known as a bullish intermediate confirmation signal. In fact, let me right click on this chart and go to maximize sell, and that way you can see it in a little bit greater detail. Now the bullish intermediate confirmation signal exists when we have a bullish intermediate term posture, and right now that green line down below in the upper reversal zone does tell us that, combined with the momentum / red line in the lower reversal zone on the same day. Now, in addition to that, we also take a look at that blue near-term line for some additional analysis of that particular signal. And where we like to see the blue line is between 50 and 20 when that signal pops up. So right now, you can see that that blue line is at 46.55 and falling. So in other words, this is a more ideal setup in terms of the bullish intermediate confirmation signal. Notice that yesterday, you also had a bullish intermediate confirmation signal on the S&P 500 because that red line was about right there yesterday. Of course, the green line was still in the upper reversal zone, but what you didn't have yesterday was the blue line in a better position. That blue line was still way up here, and you kind of need that breathe in, breathe out type of behavior out of that blue line to give you a sense that there's enough of a pullback. Yesterday, yeah, the market was down a little bit, but it wasn't an aggressive pullback. Today, still not an aggressive pullback, but it is at least 2 straight days to the downside. In the past, you can see that we really haven't gone more than 2 days to the downside. We had 2 days to the downside back here. The next day was followed by a pop higher. Back in this time period, we had 2 out of 3 days to the downside. Actually, we did have a handful of days to the downside here, but that was kind of rectified there within short order as well. So point being, this has been a bullish market. It continues to be. As you can see right here, background color of the chart suggests that our posture remains bullish at this time from an intermediate time perspective. Or an intermediate term perspective. That green moving average line also signifies that price is above a rising moving average, which many bullish traders would appreciate. As we look back at some of the other indices now, notice that the Dow Jones was down 0.29% today, so that was the one that did take it on the chin the worst out of the 4 indices here today. But just like the S&P 500, we have a bullish intermediate confirmation signal on the Dow Jones as well. Of course, remains with a bullish posture. All of these charts still have a bullish intermediate term posture. The NASDAQ was basically flat today. It was up 0.04 at the end of the day. You can see it was trading a little bit higher earlier in the day. And you'll notice that it doesn't quite have that bullish intermediate confirmation signal because the momentum / red line is at 22.49. Remember, that line would have to be below 20. The thing about the NASDAQ that's kind of interesting, I mentioned in the intro that we are on the biggest win streak of the year for that particular index, but you will also notice that we started that win streak below the moving average, and as we've risen, that momentum has slowed down a little bit. So while we do get just incremental higher closes each and every day, they really haven't made much progress here in the last 2 or 3 days. And in fact, where we stand right now in the NASDAQ is up at a little bit of a resistance area. Now, whether that holds or not, we won't know until the next couple of days come forward. But right now, just be aware that the chart looks a little bit different on the NASDAQ than what we saw on the Dow Jones and the S&P 500 because those two indices already cleared their previous highs, whereas the NASDAQ's still working on it despite their win streak that they're on right now. And then the Russell 2000, you can see, was up 0.24% today, so that was the biggest gainer out of these 4 indices. But just like I've mentioned in previous videos, in fact, we have an iron condor on this one right now. It's basically sideways price action here. So I wouldn't get too excited on the small caps here, either to the downside or to the upside until we see either a break of resistance or support. Let's take a look at another chart here. Let's do a chart 4C in this one. This is the 3 green arrows chart setup. So again, we're looking at 3 months worth of data on each of these 4 charts here. And when you see the green background colors on these charts, that means you have 3 green arrows. In other words, you have price above a rising moving average. You have MACD with a bullish view towards it, and the stochastics as well. So as it stands right now, we continue to have 3 green arrows on the S&P 500. As you can see, that background color is shaded green. But we do have a change over here on the Dow Jones. Notice that today we received a red arrow on the MACD telling us that we have a little bit of a loss of momentum there, and so that no longer does have 3 green arrows. It will be shaded white here in that background area starting tomorrow morning. On the NASDAQ, we do have 3 green arrows at this time, and on the Russell 2000 we do as well. But again, 3 green arrows is kind of an enhancement to a trend trading strategy, and so when you have a sideways tracking stock like the Russell 2000, you don't want to make too much of that either. The other indices have a little bit more oomph to them price-wise, and so maybe it's a little bit more appropriate on the other ones. But the Russell 2000 is just more of a sideways trending chart right now. Let's go ahead and take a look now at maybe the longer-term view for the 1040 crossover method, which is chart 4D. And as you can see here, nothing really to worry about from this perspective. This is our way to look at things from a long-term perspective as opposed to intermediate or near-term or momentum. This is a long-term view of posture setting using a 10-period weekly moving average and a 40 weekly moving average, and just trying to see when those moving averages themselves cross over. We haven't had any crossover signals for over 2 years, meaning that long-term posture has been bullish and it remains bullish at this time. There's nothing that we can see in front of us right now that will change that. Now, obviously, news can affect things at any given moment of time, but as of right now, just purely from a technical analysis perspective, we have no reason to believe that the 10-period moving average is going to cross down below the 40-period moving average, or in other words, these orange lines crossing down below the blue lines on this chart. Let's go ahead and do some 12-grid analysis now, starting with chart 4E. And this is going to be our intermarket analysis 12 grid here. And you can see that when you have a background color that's green, that suggests a bullish posture. When you have a background color that's pink, you have a bearish posture. The VIX was up today, but it wasn't up all that much, only 3.8%. Remember, that's a relatively quiet day for the VIX. When you look at some of these other indices here today and benchmarks, you'll see there wasn't a whole lot of big movers in any direction. The one that I do want to point out is TLT and TNX right here. Remember, those two are basically linked together because they basically move in the opposite direction of one another, since one of them is bonds and one of them is bond yields. Well, you can see here today, bond yields fell, whereas the price of bonds went up. That's what we're seeing there with TLT. Also recognize that you have this oversold cluster signal that occurred on TLT just yesterday. So today was a nice kickoff in the right direction if you were looking for a reversion to the mean type of a trade there on TLT. So we'll take a look at that a little bit later in our trade application as well. But the other one that I wanted to point out here, UUP, which is a chart in the lower left-hand corner here. Remember, that tracks the US dollar, and we broke out to new multi-month highs. In fact, this might be even further back than that, yearly highs. Let's just see here if we go back a one-year chart. Yeah, that's yearly highs that we just put in on the dollar there. Remember, there was some question on whether that particular instrument would continue to rise. We even saw a couple of days right here where it did close below that moving average. People were wondering, okay, is this thing getting a little bit long in the tooth or what? Well, all of a sudden, we're looking back, dollar remains strong, and here we are at new yearly highs for UUP. Now that brings up another thing I wanted to mention here tonight. Earlier today, I did construct a new 12 grid set for those of you that are Premium Market Scholars subscribers, and I did update my shared links on the marketscholars.com website. So for those of you that are premium subscribers, you're welcome to log in and check that out under my chart importation tutorial area. But the charts in question, there were two of them that I created this morning. One of them was, if I can find it here, actually it's on my other paper money account. Hang on just a second, because I think I have that pulled up still on my other monitor, and that way I can at least show you what I was working on here. All right, there we go. So just pulling this into view here. So one of them is chart 4Q, and this will be a 12 grid that focuses on commodities. And so it's kind of the same thought process as when you watch me go through these 12 grids, you know, on the US sectors or the intermarket analysis or the foreign stock markets. So here you can kind of see that on the top rung of this, you're going to have the energy markets. So you've got oil, natural gas, heating oil, gasoline. In the middle rung, you've kind of got the metals. So you've got gold, silver, platinum, and copper. And then on the bottom rung, you've got more of those agricultural soft types of commodities. So you've got corn, sugar, cocoa, and coffee. So this will be one more view that we can try to gain insight from. You can see most commodities are tracking down. With the US dollar being strong, that makes perfect sense. The other one was chart for, let's see, P, I believe it was. Yeah, there it is. And this is our currencies 12 grid here. So of course we look at the UUP from a high level perspective on the intermarket 12 grid, but for those of you that want to kind of get down into a more granular level, this will show you 12 different currency pairs versus one another to kind of get a sense of what the postures of these various currencies are right now as well. So of course you got your euro, your British pound, your Aussie dollar, New Zealand dollar, Swiss franc, Canadian dollar, Japanese yen, Singapore dollar, Mexican peso, Thai baht, Turkish lira, and South African rand. So anyway, for those of you that are premium scholars, make sure you go download those new charts if those are of interest to you. Let's go ahead and take a look at our foreign stock markets 12 grid and take a look at what sort of markets might be moving around the world. Well, as we look at this, you know, there's a couple of them that catch my eye. First of all, India has had a remarkable turnaround. You know, it wasn't too long ago, back here at the end of June, where India was looking kind of sick. You know, a lot of the emerging markets were, so it's nothing specific to India, but it was just really struggling, you know, putting in lower highs and lower lows. Well, look at where we're at now. All of a sudden, India is at a 3-month high. It's up 2.5% over the last 3 months. So it's more of a leadership area of the world right now rather than a laggard. So that was a pretty quick reversal there on India. Some of the other areas that have been doing well, Mexico had been a leading area. It did fall significantly today. Mexico is down 2.5% today, but it remains with a bullish posture, as you can tell by the background color of that chart. And you'll notice Mexico's up about 8.6% over the last 3 months. And then you also have Israel down below here that's up 7% over the last 3 months, and it remains with a bullish posture as well. So at least there's a few pockets here and there of some strength that's taking place. Notice that Russia remains one of our lagging areas of the world, at least in the equity market standpoint. Remember that Russia is oftentimes linked to oil prices, and with oil prices falling fairly significantly here recently. It's not a big surprise to see Russia falling as well. So again, here's USO to kind of get a sense of what's going on with oil. It was struggling right there, or you could look at /CL to kind of see it's kind of wallowing here underneath that moving average. So as crude oil will go, sometimes that will affect Russia as well. And then let's take a look at the U.S. markets from a sector perspective. This is chart 4G for those of you that are premium scholars. And as you can see here, it's actually a pretty promising picture in the United States. We've been very lucky here, admittedly. You know, the rest of the world equity markets, investors have struggled this year in many areas of the world. The United States has largely kind of brushed off concerns and continues to track higher. You can see the S&P 500 remains with that bullish posture, and really the only sector left on the board that does not have a bullish posture is energy, which I mentioned a moment ago is probably due to the fact that crude oil has been struggling. So a lot of those energy related stocks are struggling here recently as well. So, you know, things looking a little bit better from that perspective there, but you've got some nice trends on the board here. You know, real estate looks good. You've got utilities, that looks good. You got telecom, that looks good. You had staples that were in the driver's seat there, but they have had a 3-day pullback here, but still has not wrecked that uptrend. Still higher highs and higher lows. Of course, healthcare remains the leader of this market. Discretionary isn't going away quietly, making a nice move there, hitting new 3-month highs. And even technology with a pretty nice rebound. It's not quite to new 3-month highs yet, but it's knocking on the door of it, where, you know, it kind of looked a little bit skittish here a week or two ago with some of the Facebook and Twitter news and some of those things. So the markets on the whole have remained quite resilient. They've been impressive, to say the least, here this summer. So the other thing that I wanted to do here is kind of point out that on our website, well, first of all, for those of you that are premium scholars, remember I did teach a class earlier today. My question and answer class here is on Thursdays. And so if you have any interesting questions like, you know, what are my thoughts on Disney or on Philip Morris or on Kraft Heinz, looking at, you know, historical dividend yields, looking at average high yields, looking at World Wrestling Entertainment. So that was kind of a fun conversation we had today. Qualcomm we talked about today. Allocation into ETFs we talked about today. We talked about AmeriGas partners. So we had a conversation about master limited partnerships here today. Talked about how to build your own ratio charts. We talked about the pros and cons of doing an automatic reinvest in the dividend reinvestment program. We talk about, you know, a company like Nielsen. Talked about trailing stops, and then we looked at a tobacco company called Universal. So if any of those topics sound interesting to you, make sure you're going and taking advantage of those resources that David and I give you here at Market Scholars. But the reason I wanted to bring you over here is just to remind you that you can watch these market outlook videos on our blog. So I just right-clicked on our blog there to open it up on a new tab up here at the top. And I'll just use David's market outlook from yesterday as an example. So as I click on that there, you can then go into that blog post and watch it directly from the blog post itself. Now, while you're doing that, we ask 3 clicks out of you. If you wouldn't mind clicking like right underneath it on the Twitter feed and also on the Facebook feed, and then also right down here on our website itself. What that does is it allows us to know that these are useful videos for you guys on a daily basis. All right, let's go ahead and drift on back over here now to the paper money account. The other thing I wanted to mention is that we are kind of approaching options expiration cycle here very quickly as well. So I wanted to shut down a few trades while we had the opportunity. Remember when David and I do the live market outlook video, which we're hoping will be launched by the end of August. That's kind of our game plan right now, so stay tuned on those details. We're going to hope to do more management of our trades with you, but for the time being we don't have that opportunity, so I'm just going to do them right here in this pre-recorded video. Notice that Medtronic is a trade that is right now in the money, but remember we did that as a buy right, so I don't mind letting that go. That one does expire tomorrow. We're up about 220 bucks on that one, and I'm okay with the market makers taking away our 100 shares of Medtronic on that one. These other trades with Hershey's, that expires 8 days from right now, but that was a sold put trade where I don't mind being put the company, so I'm not going to buy that one back. I'm just going to let it kind of sit as is. We're up about 67 bucks on that one. IWM, that was the one that I mentioned before that we're doing an iron condor on, so that one's going swimmingly for us, so we don't need to take any action on that. But on these spreads that we have down here, those are all expiring, I believe, 8 days from now. So we're talking about the South African bear call spread. We're talking about the bull put spread we had on Lowe's, and we're talking about the bull put spread that we had on National Oil Well Varco. You can see that we're up on all three of those trades. Not tremendously, but about 20-30 bucks on each of them. With them kind of coming in close to the expiration date, I will just plan on closing all of those down starting tomorrow, because I don't want to roll the dice on any potential movements away from us here in the next week before options expiration. And then lastly, we have that Microsoft trade, and that one turned out to be a real nice one for us. Remember, this one was a long call vertical spread, and so we needed directionality out of this one. Fortunately, we got it, so we are up about 412 bucks on that one. Remember, ideally we wanted Microsoft to close above 110 on expiration day. We're sitting at 109.67 right now, so I'm going to go ahead and close that one down starting tomorrow as well, just to kind of clear out the deck a little bit for us. Now on to our trade application example here for today. I mentioned already it was going to focus on TLT, so let me go over here to chart 4A, and as you can see, when I pull up TLT, there it is. We had some changes here today, according to the market forecast indicator. First of all, recognize that yesterday we had that oversold cluster signal. Remember, that happens when all three of those colored lines are in the lower reversal zone on the same day. So we had the green, the red, and the blue all down here yesterday. We also had it back here one day, but this one was the more recent one. And importantly, today we had a reversion to the mean. So what you want to see if you're looking for some sort of activity like that is an immediate response. Notice that we had one of those over here as well. It's very easy to spot on our premium charts here because we can just look for these dots. You don't have to kind of eyeball whether you had a cluster or not. These dots will tell you whether you did. So we of course had a oversold cluster signal here as well, and we had an immediate reversion to the mean starting the very next day, and of course that thing just launched. That would have been a really nice day to take a bullish trade. Well, that fast forwards us here to where we're at today. We had that oversold cluster signal on TLT, which of course tracks the long U.S. Treasury bond. And you can see that today we had a beautiful bounce off and away from that area, telling us that that reversion to the mean may hold. Remember, they don't have to. This one looks like it's showing some promise right off the bat. Notice that we now have a bullish posture. How do we know that? Well, that background color of the chart is green for one, but you can also just see down below here that this green intermediate line has now emerged out of the lower reversal zone and is tracking higher. So we had an oversold cluster signal as of yesterday, and right away here today, one day later, we already have a bullish posture. So we'll see how that can work out for us when we take a bull put spread trade on this. So I'm going to come over here to the trade tab, and I'm going to pull up the option chain here for TLT and look at 43 days until expiration. Now, as I look at this, you can kind of see that where we oftentimes focus our efforts for a delta perspective is on the 31, and that's where, or around the 30, I should say, and this one's on a 31 exactly, so it's pretty close to where we would be looking, and that's the 118. As I right-click on the 118 puts, because remember that's the one we're going to sell here, and I go to sell vertical, that will load up our bull put spread down below. And you can see that I'm selling the 118, I'm buying the 117, and we're collecting a credit of 23 cents. When I was looking at this right before the market closed, it was 24 cents. So it did come down 1 penny. So it depends on whether you want to round up or round down, but effectively 23 or 24 cents is a 30% return on risk when you're dealing with a $1 wide credit spread like we are right here. So for those of you that are newer to credit spreads, what we're doing here is we're selling the 118 put and we're buying the 117 put in the same trade as kind of our built-in protection. what we want to have accomplished with this trade is for TLT to stay above 118 through the life of the trade. And if that happens, then we keep this credit that we're going to take in when we sell this spread starting tomorrow morning. Now, if you look at that 118 and kind of eyeball it on the chart to see where your trade could run into a little bit of heat, notice that 118 is right down here on the chart. So in other words, this particular chart would have to come down and close below all of this congestion zone that it had in the last month when it had a bearish posture. And that, of course, could happen. I mean, anything is possible. There's plenty of time in this trade, 40 plus days. And so I don't want to make it seem like it's not going to happen. Could very easily happen. But right now, again, there's at least some elements of why we might expect this thing to kind of stabilize in these areas and potentially even go higher. But as long as it stays above 118 through the expiration date, then we'll keep that credit that we're going to take in. So with that, let's go ahead and confirm and send. I'll review this one last time here. Of course, you're going to position size however is best for your account, but we're just going to do one contract here just to highlight it from an educational perspective, and then I'm going to send that one in. So we'll see if we can get filled on that first thing in the morning and see if the bond market can continue its rally that it started here today. All right, well, that wraps us up for the day. I appreciate you tuning in as always. Remember, David has a class tonight for his ETF portfolio management class for those of you that are premium scholars, so make sure you pop in on over to that if the time affords you. And tomorrow, remember, is Friday, so that's when I do my sector selector, so be on the lookout for that graphic as well to kind of see what types of sector rotation has been taking place here this week. So with that, I want to wish you all the best with your trades and your investments. Goodbye for now.